Hello everyone and welcome to another weekly outlook video. So we are starting a new month and that is the month of December. So this is the last month of the year and December is known to be a holiday season month, and of course also again because it's the last month of the year, I'd advise don't have so much expectations. This is the time to cut back either on your trades or cut back on positions. It's not a time to increase your size. There are people who would want to increase their size simply because maybe because you want to end the year with a certain profit, either you've passed a prop farm challenge, so you want to increase your positions and all that. Please don't do that. That is a trap. Okay, so we're going to start with DXY, and so of course, because it's a new month, we're going to start with the monthly candle. So now this is what we have. November. This is the month of November. And this is January. So this is the high of 2025. And this is the lowest point that price got to 2025. So I remember we analyzed and we said that November price is coming for 30% of this yearly range. So 30% is TGF. When price forms the high and the low, we have that retracement. Normally, it's the last quarter of the last quarter of the year. That is when you expect to get TGF, and exactly that's what we did. And you can see this is 30% of the range. So we just left with 1 month and we close the year. So let's look at the weekly time frame. So if you look at the weekly time frame, we have this fair value gap which price tagged and we had this bullish reaction from it. Honestly, I was expecting more bullish continuation moves, and this would have been used as support for price. But as you can see, last week we actually closed as an inside week. We didn't have a lot of opportunities to trade this week that just ended. And that's because, again, on Thursday we had a Thanksgiving holiday. That was a US holiday. So next week, December, I think December 10th, we have FOMC news release. And right now, I believe the USD currencies, or just USD as a whole, we are really waiting for that FOMC news release. So I won't be surprised if this week we don't have a lot of action as price is waiting for the FOMC news release. But either way, so this is what we have. As long as price is above this fair value gap, we are bullish for dollar. Once we violate this fair value gap, that's when we can think of a bearish dollar. So let's look at the daily time frame. So if you look at the daily time frame, you can clearly see that we had this bearish price action last week, and we have inverted this bullish fair value gap. So on Friday, we had a retracement to this inversion fair value gap. And if you're going to work with this, then this inversion fair value gap should be used to do what? To push price lower if you're going to have a bearish move. However, if you also look at this for bullish scenario, this here is an order block, right? So price also has tagged a bullish order block, and we have not yet violated this weekly fair value gap. So for bullish moves, I see how price can use this to push price higher. And of course, you're likely to get this. So I see how we are likely to have a bullish move or a bearish move where price is at the moment. So in terms of bias, I'm a bit neutral. So let's look at USDCHF. So USDCHF and DXY are positively correlated. So we'll start with the monthly time frame. And you can see this is the month of November. If you look at USDCHF, you'll realize that at the moment we have SMT with USDCHF and DXY, because you could DXY price first of all tagged this internal range. This is a 3 months fair value gap. So price already tagged that for DXY, and also price gave us a retracement to this 30% of the yearly range, which you can see USDCHF has not, and also USDCHF did not tag the previous 3 month internal range liquidity, and also this high here. So as of now, again, USD CHF, you're going to work with DXY. The kind of price action that DXY will give us, that is what we will use to determine USDCHF price action. So let's look at the daily time frame. So if you look at USDCHF, you can see we have this fair value gap, which price is currently at this fair value gap. So if you're going to have a bullish dollar, then I want to see price use this to push price higher. If you're going to have a bearish dollar, then you'll see price will invert this and then we use it to push price lower. Then this high and this high, these are relative equal highs. These are good places the market can go for. If you're going to have a bearish dollar, then this low here is what I'm looking at. So let's look at EURUSD. So EURUSD and DXY are negatively correlated. So this is the monthly time frame, and you can see this here is a fair value gap. This is a 3 months fair value gap, which again DXY tagged the 3-month fair value gap, but USDCHF and EURUSD price did not tag this 3 months fair value gap. So, which was actually a draw of liquidity. So if you look at the weekly, this is what you have. You can see it's been giving us bearish moves. I wanted to see price get here, but price got here for GBPUSD. GBPUSD and EURUSD are positively correlated. So if you look at the daily time frame, you can see how clear this bearish move has been. You can see we're making lower lows, lower high, lower lows, lower high. Then here we hit a failed swing low. We did not make a lower low. And this is where price is at the moment. So again, if dollar is bullish, then of course you'd want to see a bearish EURUSD. So if dollar is bullish, then price would violate. You can see here already we have inverted this fair value gap. And then we want to see price close below here, and we use this to push price lower. And if dollar is weak, then we want to see price use this inversion fair value gap to push price higher. And then of course we'd be looking at these highs here. They have this buy side liquidity and this buy side liquidity. Actually, this high and this high, these are relative equal highs. So let's look at GBPUSD. GBPUSD and EURUSD, they are positively correlated and negatively correlated with the DXY. So as you can see, GBPUSD on the monthly price tagged this monthly fair value gap. So if you look at the weekly time frame, you can see we have this fair value gap here. This is a bearish fair value gap. So either we use this to push price lower if you're bearish, or we will close above this and then expect this will be used as support to push price higher. So on the daily, you can see again, price used this as support to push price higher. I had this order block which has been used again to push price higher. You can see we have this fair value gap here. So this fair value gap, if you're bearish, it can be used to push price lower, or we want to see price inverted, then it can be a good point of interest where we would want to see price use it to push price higher for a bullish GBP USD. And of course, if you're bullish, you're looking at this high here. This buy side liquidity here is a good target to look at. If you're bearish, of course, we have this sell side liquidity that we can look at. So let's look at yen basket. So yen basket is JPY. You can see this is the previous year low. And we've been looking at this low as our draw of liquidity for price so far. And you can see the month of November, we've closed as a bearish candle. So on the weekly, you can see price has left this as a breakaway gap. And so far, it's just been bearish expansion. Do we have a fair value gap here? We have a tiny fair value gap right here. So if we look at the daily time frame, of course, this is our weekly fair value gap and this is our weekly fair value gap. And you can see we had all this bearish expansion. You could see on the weekly, this was a week, these are some few weeks of a bearish expansion where we do not have any retracement to any internal range liquidity. Okay, so there's a possibility we're likely to get a retracement either to this weekly fair value gap and we use it to push price lower, or you can also have a situation where price weaks to this there's an order block, daily order block, and also tagging the 50%, getting to retracing to the 50% of this range, or you can even have a deeper retracement to this fair value gap here. But it would be nice if we leave this fair value gap as a breakaway gap. So if you look at the daily time frame, of course, we've just been having bearish expansion. Watch already we have an order block here. So if you're not going to have a retracement, then this daily order block here can be used by price for bearish moves. So let's look at GBPJPY. So GBPJPY and yen basket are negatively correlated. If you look at the monthly time frame, this is what you have. You can see this high here has been our draw of liquidity and our target. So we want to see price get here before the year comes to an end. So on the weekly time frame, we have this fair value gap here, and we also have this order block here. So I want to see price give us that retracement to this fair value gap, or we can have a deeper retracement to this order block, but this fair value gap is what I'm watching. Then use it to push price higher. That's scenario one. Or we can have a situation where the market just open, we rally, tag our draw of liquidity, then we get a retracement for the rest of December. So if you look at the daily time frame, it is so clear. You can see we have this fair value gap here. So if you're just going to get a rally, tag this and then tag our draw of liquidity and we are done, then this can be a good position. This can be a good key level that price can use. We can have Monday open, we sweep this low, and then we use it to push price higher. So that's the scenario for just rallying. Or the best case scenario, which is what I also want to see price, is we get a retracement to internal range liquidity of the weekly time frame. So let's look at gold. Gold, you can see we closed as an inside month. We did not take out previous month high, and we also did not take out the previous month low. So if you look at the weekly time frame, you can see we had this volume imbalance here. And I remember I told you guys, the moment we violate this, which we have done here, then there's a high probability that we'll be looking at bullish gold. And you can see that's exactly what happened last week. We actually closed above this gap here. So there's a high probability that we're likely to see a bullish price action for gold. There's a possibility that we can have a retracement target before we continue with that bullish move. Or we can fail to do that. We use daily key levels and just go for that. So if you look at the daily time frame, you can clearly see this is what we have, and we inverted this fair value gap here. So this fair value gap has been inverted. So we can have price retrace to this daily inversion fair value gap. And also in the process, tag our weekly, the gap that I just showed you in the weekly time frame. Then we have that bullish move. And this would be a good setup if price gives us this kind of a retracement before we get that bullish move. You can see here this fair value gap is just a few pips before price invert it. There's also a possibility we can just rally, invert it, and use it to push price higher. And price fails to get to this internal range liquidity. So I'm also watching that. So let's look at NAS 100. Of course, on the monthly time frame, you can see we had this tiny fair value gap. The month of November, you can see we have tagged this tiny fair value gap, and we have all this week. I would consider this more of like a rejection. So there's a high probability we are looking at a bullish NAS 100. So if you look at the weekly, you can see this is the week that just ended, and so far we have an order block formed here. So that's all I see. So if you look at the daily time frame, of course, this is our weekly order block. We have daily order block here, and we have a fair value gap right here. So this is a daily fair value gap. If you're bullish, I'd be looking at this fair value gap, and of course, in the process, price will have tagged the weekly order block before we continue with the bullish move. Or we have a deeper retracement, because if you take your fib and mark from this low to that high, you can see 50% of the range is here to this daily order block, which is still part of the weekly order block. All this still forms the weekly order block before we continue with the bullish move. So guys, if you enjoyed this video, kindly give it a thumbs up. If you have not subscribed to this channel, please subscribe. I'll see you in the next one.